This conference will now be recorded.
Good morning or good afternoon, depending where you are in the country. Today, I am very excited about our strategic partnership that we have with the Alt Group and the founder and president of that, Phil Graham, Chief Sales Officer, really a man that wears many different hats, has a phenomenal background in working with advisors. He and I go back quite some ways. Phil, it's been a great ride already as we've been, building this strategic partnership. And I just want to thank you for being on here today to be able to share with our advisor partners, prospectively and currently, what the opportunity is that is before them, where our two forces have joined to be able to really help the end users that are out in the industry, unbeknownst to them, whenever they learn about some of the things you're going to be talking about today. So without further ado, I want to hand over controls to Phil Graham of the Alt Group. Phil, the floor is yours.
Well, thank you, Carter. And yes, we have known each other for quite some time. And what I was so excited about is my vision for the alternative group. My why is right here on the screen, and my whole team's why is we wake up every day because we want to empower and educate advisors everywhere so they can improve not only their lives but also their clients' lives and both achieve their goals. And I know that at CSI you have a very similar vision. And right now I'm doing one product. I do the estate liquidity plan. And with what you're doing with the estate plan and everything else at CSI Financial, it was really a perfect fit. And I know you and I were talking about, what the threat is to an advisor's business. And over the last couple of years, there's been a lot of potential threats. People were really nervous about the DOL and Department of Labor rule, other SEC, FINRA rules coming out, the Department of Insurances, and a lot of people are worried about market returns or product performance. And, over the last year or two, I've really put a lot of thought into this and realized that those things aren't really threats to an advisor's business. They're more of an inconvenience. And I really started digging deep into what the real threat is. And what I saw as the real threat was that we are entering in the greatest wealth transfer in history. The statistics say anywhere between 25 million and 45 million, or excuse me, 25 trillion with a T and
Yeah.
$45 trillion. Big difference between million and trillion.
Yep.
Between 25 and 45 trillion dollars is going to pass from one generation to the next over the next 25 years. That is incredible. Now, here's the threat, and this is what's really scary. I think everybody knew that it was out there, but no one had experienced it because a lot of your clients had not started passing away yet. And here's some of the statistics, Carter. Vanguard says that only 5% of beneficiaries will keep their parents' advisor. So that means that 95% of beneficiaries, according to Vanguard, are going to walk out the door the second they inherit the money. Now, I think that's a little extreme. And so let's look at what Investment News said. Investment News says 66% of children fire their parents' advisor. Now, let's think about that for a second. If 66% of your assets started walking out the door, you can't refill the bucket fast enough to keep your business from dwindling away. And in this same article, they talk about advisors have to figure out how to connect with this next generation, because when you as an advisor look to sell your business or pass it to your successor, if you don't have a system in place, your business is going to be worth less. Not worthless, but it's going to be worth substantially less if you don't have some kind of system in place. Now, this is from the News Journal, very similar to what we just saw on Investment News, nearly 66% of children fire the parent's financial advisor upon inheriting wealth. That's really scary to me. Now, that's the threat to the financial advisor, but I've also realized there's a serious threat to these families as they inherit money. So, Carter, let's talk about what happens when a client dies. And this is how we're going to kind of tie everything together. So, when a client dies, I was just in an advisor's office yesterday, and I said, okay, when a client dies, the beneficiary calls your office and says, Carter, mom just passed away. We need money. What do you do? Can you just give them money? No.
Yeah, let me just send you.
You're going to say, well, we need a death certificate to start the process, right? That's like the first thing is I'm sorry for your loss. We need a copy of the death certificate so we can start the claims process in order to get access to any of the money. Well, how long does a death certificate take? So I went to askafuneraldirector.com because when I ask advisors and clients, they get all kinds of different answers. But on average, it takes approximately 10 business days, depending on state, which is 2 weeks, to get your certified copy of a death certificate. So we're at least 2 weeks before we get the death certificate, assuming they file it the same day. Then you're going to have another at least a week for claims. So we're 3 to 4 weeks before those beneficiaries get access to a penny. I think you're starting to see where some of the problems come in and why you're not going to retain these assets. So we just talked about 10 days, but let's look at two extreme examples. Texas, as of February 12th, 2019, so this is fairly recent, they're experiencing delays of 4 to 6 weeks to get a copy of a certified death certificate. Now, right below that, I pulled this exact same day. I pulled it from Texas. The Connecticut State Department of Health, they're experiencing process delays of 6 to 8 weeks, even worse than Texas. Now, even if you're not in Texas or Connecticut, who's to say how long it's going to take whenever your clients pass away in your state, depending on what's going on? Either way, even at the best case scenario of about 2 to 3 weeks, we're still a month before we get access to money, best case scenario. And so here's the client's current plan. I love to ask clients this, Carter. I say, what is your plan for your beneficiaries to manage your final expenses when you pass away? And clients are going to say one or two things. They're going to go, I don't have a plan. Okay, well, that's a bad plan. That actually is a plan. It's just a really bad one. And I explain how dying is a process, and like the dying is the easy part. It's untangling everything else, is what takes so long. Or they're going to say, yeah, I have a plan, Carter. It's imperative that we ask them, what is your plan? Because 9 times out of 10, their plan does not work. And they're going to say things like, well, Carter, I have that life insurance you sold me. I got $1 million of life insurance. They can use that. No, won't work. Requires a death certificate. Carter, what about all those annuities? My kids can use that money. Nope. Requires death certificate. Oh, I got it, Carter. I have money at the bank. We got TOD, POD. It's all set up. My banker helped me. We're ready to go. Nope. Requires death certificate. What about all that money you managed for me, Carter? We got money to money market inside our RIA account. Nope, requires death certificate. Now here's a good one, Carter. The kids are joint owners. You will come across this quite a bit because it had always been true until now that was the only option. Now the problem with kids as joint owners is that if they leave your office, get in a car wreck, get sued, that money's gone. They get divorced, that money's as good as gone. creditors, lawsuit, bankruptcy, theft. And if you ask most beneficiaries if they want to be on their parents' account with all this risk, and if they knew there was another way, the beneficiary will choose the other way. Now, some clients may have even had the foresight of go down to the funeral home and they've purchased some kind of burial policy or prepaid funeral. That's fantastic. However, the funeral is one of the least expensive parts of this whole process. So that is a great first step, but we have a whole list of additional expenses and costs to the family that are typically an additional $10,000, $15,000 or more than what just that funeral cost is. So we educate them that that is a great first step, but we need to do a little bit more.
Yeah, Phil, if you don't mind, let me just jump in here just real fast too, because I want to talk about a client that I was just talking with yesterday. And guess during the data collecting that I was going through and learning about her situation, because she wanted to update her power of attorney because she was dealing with her own brother who lives in Northern California. She lives here in Arizona, moved out here in 2002 from Chicago. She was dealing with some incapacity issues, which is another conversation for another time. That's something that we can obviously address early on as well. But as she was sharing with me that she wanted to get her power of attorney all taken care of, she let me know that she has 3 daughters that are all married, 9 grandchildren. 1 daughter lives in Illinois, 1 daughter lives in Canada, Toronto, another daughter lives in China. Now, do you think, Phil, that when she passes away, that all of those kids are going to want to probably attend that funeral from all over the country? And isn't that going to be very expensive for them to be able to do that travel and all that stuff that comes with that, what I just shared with you? So I just broached the subject with her yesterday and she was like, wait, what? So with that being said, that's a real life situation that happens every single day.
I agree. That is a great example that we're solving that problem on a daily basis for clients and their beneficiaries. And again, at the end of this, you'll see how that all ties together to the advisor being the hero when it comes to this situation. So thank you, Carter. We look at the client's current plan doesn't work. Here's an example. That gentleman on the right, you may recognize him. That is Prince, the deceased musician. His net worth was over $300 million, and we're not going to get into how awful his estate planning was into this conversation. I just want to talk about the numbers. $300 million inheritance is going to this family. The family did not have enough money to bury him. So that gentleman on the left, Mr. George Lopez, the actor and comedian, gave Prince's family $20,000 as a gift to help with living and travel expenses while they figured out his estate. Now, this happens every day in America. The difference is the person that dies isn't Prince, and the person that gives the family money is not George Lopez. The person that dies is your client, and the person that gives the money is one of the family members that is deemed more successful than the others, is forced, in most cases, to pay the bills. They never get reimbursed, and now Thanksgiving and holidays are awkward. That's best case scenario. A lot of families don't even have the money to do that. Either way, our clients have money or they wouldn't be your clients. The beneficiaries are going to inherit that money Why would we not make a small piece of it available immediately? And we're going to get into that. So here's our solution. Literally, I want to say every single one of your clients will qualify, but I guess you could have a client that's 100 years old. But we issue to age 99 on a 4-page application. Everybody qualifies. We can do up to $100,000 in most states. The chassis that we work off, Carter, is a single premium, whole life. Remember, I said it's guarantee issue. We're not increasing their death benefit. It's not leveraged like a traditional life policy. Think of it like a tax-deferred, tax-free CD. The client gives us $25,000. That $25,000 is earning a fixed interest rate like a CD, growing tax-deferred, and then passes to the family tax-free. And then the secret sauce is it's liquid in 24 to 48 hours after death without a death certificate. That's the magic. We literally get the beneficiaries the money in 24 to 48 hours without a death certificate. This allows you as the advisor to be the first one in the door with money. You're the hero. And we increase the probability of you maintaining those funds 10 times. And here's kind of our process, Carter. We include the claim form with the policy. You already have it. We tell the advisor to go ahead and put it in your file. That way you have a copy of it for when something happens. We want the kids involved in the delivery process. So after you write this policy, we either want the kids to come into your office, or if they're not local, get on a conference call, explain to the beneficiaries what you've put in place, or explain to the executor what you've put in place and how it works and why this is there. Our patented delivery system notifies the advisor immediately upon a claim being filed. So just in case the beneficiaries call the insurance company direct, you get an email notification immediately. The beneficiary submits the claim form. The money is overnighted to them, typically the same day, but they're getting it in 24 to 48 hours. Now, after you tell the beneficiaries that you're sorry for your loss, pay your condolences, tell them they have this money coming in, take a deep breath, it's going to be okay, here's $25,000. Next week, when things settle down, come into the office, and our office will help you with the entire claims process. Bring not only the claim information for the policies that your family had with our office, bring all of them in, old policies or other employment policies they may have had, that we can manage all of that. Now, Carter, in order to make proper recommendations on the best way to liquidate these accounts, I need to know a little bit about the beneficiary's financial situation so we don't step into any tax time bombs or make any other issues that cost those beneficiaries money. And by integrating yourself as the advisor into this claims process, into that beneficiary's financial situation, we've increased those odds of you maintaining all the money plus adding the beneficiary's money. Now let's look at what normally happens today if you're not using a state liquidity plan. Beneficiary calls your office, Carter, says, hey, mom just died. You go, I'm so sorry for your loss. The next words out of their mouth typically are, hey, we need some money. And I haven't met a financial advisor yet that had a good answer for that. Like, well, we know we're going to have to get the death certificates. It's going to be a couple of weeks. Well, Carter, we need money now. I got my brother flying in from California that he can't afford his plane ticket. We got all this burial, funeral expenses. I got mom's mortgage payment we need to make. We got some other bills. I'm sorry, it's going to be probably a month before we can get you any money. But Carter, you manage over $500,000 of my mom's money. Why can't you get me any of it? You see where this conversation's going? It's not your fault that you can't get them access to any of the money, but you're the one that gets blamed. So the second they get their hands on that $500,000 that you manage, they're moving it because they blame you. And with our estate liquidity plan, it doesn't have to be that way. Now, we make this worth your time. 4-page app, that's shorter than your annuity comparison forms that you're doing nowadays. We issue our policies daily, and we pay commissions daily. And when advisors write their first application with us, they normally call me and think that they made a mistake because it was too easy, that they surely left something out. It's a 10 to 15-minute conversation, including the paperwork. So on a 70-year-old, I just blew up some of the commissions here so you can see them better. On a 70-year-old, if you did our average case size of $25,000 and you gave the client the highest interest rate at 2.25%, you would make over $2,300 on that account. Not bad for a 15-minute conversation and paperwork off an existing client. And if you did one of those a week, so that's $100,000 a month, you would generate over $123,000 in additional revenue that year. And if you were really good at it and you did $100,000 a week, which for a lot of you, that's not that much because you got a lot of clients, you're talking about approximately $500,000 of additional revenue that you're able to write off your existing clients, or we actually write when you deliver your annuity contracts on your new clients. So we are talking about substantial revenue for your office with no new client acquisition costs. But more importantly, we joke, Carter and you and I joke about this all the time. Even if we paid zero commission, you would want to write these on your clients because the big payoff is when you retain these assets when it passes to the next generation. That $500,000 you've managed for 10, 15 years, when you get to manage it for another 10, 15 years, that's the big payday. This is just paying you for your time up front. And so here's a visual I like to use. You know, client has $500,000. It's just kind of an easy number. Their beneficiaries are going to inherit $500,000 whether we do this or not, right? So we do nothing, beneficiaries are going to get $500,000. It's just going to take 30, 40, 60 days before they actually get to it. My question to the client is, if you're going to leave $500,000 to your beneficiaries, you must care about them. You must love them. That's a lot of money. How much of that $500,000 do you want them to have access to immediately to manage your final expenses so it's not a burden? Why wouldn't you want them to have access to some of this money immediately to make it easier on them at one of the hardest times in their life? Now, we're not typically overfunding this. I don't get a lot of $100,000 cases. But Carter, what you and I have kind of talked about is we want to put just enough money in to get the family past that first 30, 45, 60 days until the estate can be settled properly. So our average case size is about $25,000. Say 10, 12,000 for the funeral, another 10, 15,000 for the family and ancillary expenses and all the other things that we have listed out. Most people wouldn't hesitate to move $25,000 because it's not going away. Their heirs are still getting $500,000. We're just carving off $25,000 of it for them to get immediately and get it tax free.
Yeah, and Phil, let me just jump in. Let me just share with you in this image, in this visual actually helped one of my advisors articulate what this really does in the purpose of this to the point of it's still $500,000 is what we're really doing is we're helping to build bridges, not build walls, which is normally what ends up happening with beneficiaries if not done properly. And I loved that he said that to the clients. and the client absolutely understood exactly what that was. It is emotional, and this really helped to illustrate that for that end user client. And guess what? That's why you got the sit-up.
Hold on, I got to write that down. Build bridges, not walls. That's good. I'm officially commandeering that. So you will be hearing that on my next. You'll be hearing that on my next presentation. So you want to jump over and show that little piece of the video? So, or do you have anything else to add before I move on to that?
No, you know what? That's it. That's perfect. Obviously, our advisors can be able to reach out to you directly. They know that we have a direct, strategic partnership. So everything is above board, and everybody understands, what role that you play as it's really sort of like that strategic partner and outsource, and your team can be able to help facilitate a lot of this stuff. But they can obviously call here at our office, right? 888-316-6040. Most everybody that's watching this has all of our contact information anyway, but they can also be able to reach out to you, and you'll be able to help facilitate. But no, I think now is a great segue to that little bit of a clip that you want to share with the customizable video that we have been able to create that's consumer facing to help illustrate the point and really drum up that interest.
And I'll flip over to that. And it's funny how the first conversation that a lot of advisors ask me is, well, how do we get new clients? Well, I normally direct them back to you, Carter, because you guys have one of the most amazing client acquisition processes with the estate plan. So that's not what I do. What I do is I help you monetize your existing clients, and we do that through beneficiary reviews. If you're interested in how we set that up, feel free to reach out to me. I'll share with you the New York Post article we use in our process. I've done 2 15-minute phone interviews with 2 of our top advisors, asking them, what do they say to set up the appointment with their existing clients? What do they say when the client's in their office? How do they close the deal? How do they follow up? What does that entire process look like? I've recorded those. I'm more than happy to share that with you as well. And then a lot of our advisors, when they deliver their annuity and investment contracts, they're adding the beneficiary question on that delivery, because we do not want to mess up your process that you have in place. So I never want you to mess up your current sales process. Now, with the estate plan, for those of you that have already implemented the amazing estate plan, our estate liquidity plan is part of the estate plan. Excuse me. Yes, our estate liquidity plan is part of the estate plan. So if you've already implemented it, or if you're in that process, this is just going to be a piece of what you do. Carter and CSI Financial put together an awesome video, and I'm guessing, Carter, the audio should play through, but I'm just going to play like the first 20, 30 seconds. This is less than 3 minutes. This is the client video that Carter put together explaining what the estate liquidity plan is and how it works for consumers that can be emailed out. So I'm going to start this now. So you can kind of, I don't know if you guys could hear that or not, but at least see what our vision is on that.
Yeah, Phil, and I can share with you that you could kind of sort of hear the voiceover, but I mean, I think that they'll get the gist of the fact that this is really meant to be an easy way for your already existing clients, the already convinced, we call them, to be able to share this opportunity with them. And that's where a lot of your advisors that you've been working with have been successful and being able to share that. And it's been for us, it was really a no-brainer. I'm like, in fact, we collaborate on them. Like, check out this script. What do you think? And then it's been fantastic. So anyway, if anybody wants to get that customized, obviously we have the ability to customize that for just like what you saw there. for advisors that are, using our platform. With that, I know today is Good Friday, right? 2019. And everybody hopefully is going to have a phenomenal weekend. And I just kind of sort of timestamp this right there with that, so everybody knows, for future reference when we had this conversation. But Phil, I really appreciate the time that you spent today. I don't think this took more than maybe 30 minutes, but that 30 minutes will be well spent and an opportunity for you to be able to do not only the client acquisition on our end, but the client retention that our combined forces have brought to those advisors.
Absolutely. Thank you so much, Carter.
Absolutely. Pleasure's all mine. Everybody have a great day. Phil, Graham, you have a great weekend, and we will talk to you again soon, I'm sure.
All right. Take care. Bye, everybody.